Okay, good
So
evening,
thank you very
everyone
much. Thank you very much
from
for
Italy.
taking your time during the, let's say, aperitivo, even though I guess here in California is already dinner, maybe.
Yeah,
We
we
have a
just
little.
want to say to people that this has been recording at this time. So just that you know, we're going to use this material.
Very good. And I'm actually online from Italy. It's
Wow.
3 o'clock a.m. at this time. Filippo, we would like to know from you the principles of taxation, what we should know regarding Italian and US taxation, when we should file our income tax return in Italy and when in the USA in particular, and what we should do to avoid double taxation. I know that you have a PowerPoint presentation, so if you want to go ahead, we are
Yeah,
ready
sure.
to.
So if regarding the, let's see, the PowerPoint presentation, I'm gonna share, but of course you have it and feel free to share with all your members and I guess with all the attendees during this Zoom call. I see also there are a couple of clients here, so I'm happy that they they are here to support us. And actually, they are pretty good example of what we are doing and what we have been doing in the past 9.5 years. We're gonna celebrate, let's see, our 10 years birthday in June, and we launched the company in the summer of 2015. Now, of course, has been 10 years working cross-border between, of course, San Francisco, New York, and Italy. Our clientele is pretty, let's see, straightforward. We work mainly with Italians living here in US or Americans living and try to be resident in Italy. We are nowadays the only, let's see, in US CPA firm and in Italy studio di commercialisti that we can really help our clients on both ways, on both filing, and we are the same company. I mean, we in Italy, my partners are taking care of the Italian tax return. Here in US, Sarah and I were taking care of the, I mean, tax return. And the cool thing is that we are the same company, the same people with the same idea. So nowadays there are a lot of huge network, like for instance KPMG, BDO, PwC. So of course they are both in US, both in Italy, all over the world. But at the end of the day, the firms are run by different, let's say, individuals, different partners. What we can really offer that is unique is that at the end of the day, we have the same culture, we have the same knowledge, we have the same idea, we have the same approach. So we have a conservative approach, same is done in Italy. We have an aggressive approach, same is done in Italy. So this is very important, it's very unique because, of course, even talking with friends, competitors, all over the US, we are really the only firm that we can give this services. That is very important because at the end of the day, we're gonna talk, we're gonna speak with the same, let's say, people, and this is very important, especially when, of course, we are working on tax implication, tax saving, tax planning, especially in the recent years. We are having a lot of Americans asking multiple, of course, questions regarding the, let's see, Italian tax return because they are going to move to US thanks to the, I mean, the double passport. And it's not easy. First of all, you have to plan ahead because, of course, the Italian tax system, unfortunately, is pretty draconian. Even recently, we have a couple of former clients that they moved back to Italy and they are under audit. And with all respect, we talk about normal, let's see, salary, normal, let's see, people. They are not a billionaire. They are not VIP that they try to avoid taxation. So unfortunately, once you decide to live in Italy, and of course spending more than 183 days, you have to be careful because the tax compliance in Italy is more or less the same, but there are way more control. And it's very tricky because of course you have to register to the comune. So the why, if you are an Italian living in US, first things first, you have to register yourself at the IRE, Italian resident abroad, because this is very important, especially now there is a recent an Italian tax law that they basically fine you if you are not IRE registered. And of course, you have a lot of unfortunate chance to get audited. So first things first, once you move to US, you have your working visa, your passport, wherever it allows you to live and work here in US, and you know that you're gonna stay here longer, at least more than 183 days, you have to be I registered. This is very important. If not, there's gonna be the risk that the Italian tax system is gonna tax you on your American income when actually you are not longer living in Italy anymore. So this is very important. And again, it's happened a few weeks ago. Friends of a friends, he asked if you can help him because he's under 2019 and 2020 audit in Italy because he was not, unfortunately, either registered and he was living here in US and he was regularly filing the US tax return 1040. He assumed that filing the US tax return was fine in Italy. Unfortunately, it was not because it was not highly registered and now is under audit. So this is my first advice is get your IRE. Also, it's important for Sonia as a lawyer and Sarah being, of course, one of the board of directors of the Italian Chamber of Commerce can tell you all the other benefits about being IRE, but because tonight, unfortunately, we're going to talk about this tax implication, it's better that everybody knows that it's very important to get this IRE done.
Excuse me, Filippo. So you're saying establish your residency in one place. You cannot be a resident of two countries. You are a resident of either Italy or the US, and you establish your residency in Italy by going to the comune, the city hall, and you register there as a resident. And on the opposite side, if you decide to reside, if you reside in the US, then you have to go to the consulate, write to the consulate, let them know that you have established your residency in this country. Obviously, as an Italian citizen, and an Italian citizen must communicate this to the consulate to make sure that they registered as Italian citizens living abroad, so they don't have to pay their taxes in Italy, right?
Exactly. I also want to emphasize a very important points here, especially for our Italian American friends that they are moving to Italy, they are living to Italy. So of course, being an American in terms of American citizen, unfortunately, even though you are an Italian tax resident, you are living in Italy, you of course get your registration at the comune, you have still to file your US tax return and all the compliance related to the US tax filing. So the FBAR, that if you have I mean, a bank account in Italy, of course, you live in Italy and you have a bank account, and the bank account is higher than $10,000, you have to file the FBAR. So the why all the incomes that you are earning on maybe a US portfolio titoli or US saving account, they can be subject to double taxation. So first of all, once you are an American moving and living in Italy, you have, first of all, to comply with the US tax return. And then, of course, because you are now an Italian resident, you have to comply with the Italian tax return and tax law. The way around here in US is a little bit different. So why I stress about the IRE. If you are an Italian citizen living abroad, you, of course, are going to register as an IRE Italian citizen living abroad. You don't have to be worried about what's going on in Italy on your earned income in USA. Of course, if you are still making money in Italy, for example, you have rental income property, you bought a property in your, let's see, grandparents' village, or even you go through the estate, the house, and now you're gonna rent it out on Airbnb. Of course, that is a little bit tricky because you have to file for the income earned in Italy, the, let's say, rental income generated by the Airbnb, and you have to file the tax return, and there is this famous cedolare secca. But again, you don't have to be worried about what is earned here in US because you are, let's say, safe because you communicate that you are living abroad. So nobody can, let's say, audit you on the US part because it's crystal clear you are not anymore an Italian tax resident. You have to file as a non-resident for the rental income that I made a pretty simple example that I believe, like I say, there is a client here that has this specific situation. You have to do it. You have to pay the cedolare secca, and don't forget about it. You can have this cedolare secca that basically is, let's see, income individual tax on what you made. You can use it here in US as a foreign tax credit, and you can minimize the, let's see, US tax liabilities, offsetting your US, let's say, taxable liabilities with these paid cedolare secca in Italy. So this is
Excuse
the...
me,
Yes,
Filippo.
sure.
Cedolare secca, maybe you want to say something more about it. It's a percentage, it's a fixed percentage, right, on your income. In this case, on rents collected in Italy.
Exactly, and thank you, Sonia, to point it out and to emphasize it, because in Italy, unfortunately, and for our, let's say, American friends here tonight, you cannot, unfortunately, deduct any expense ordinary and necessary to make it happen your, let's say, rental income in Italy. Unfortunately, you're going to pay a fixed percentage on your gross rental sales. So you make on Airbnb $50,000, you're gonna get taxed 21% of this $50,000. They don't care about your expense. Here in US, like I say, is a worldwide income principle. So you have to report, of course, this income that you made in Italy, but you can deduct all the expense that are ordinarily necessary to make this income. So, of course, top line, $50,000 rental from Airbnb, and then you can deduct all the expense, the depreciation, the utilities, the repairs, the travel, because maybe you need to go there and meet your property manager, the property manager expense, I don't know, commission, And on top of that, like I say, you can use the cedolare secca, so the income tax that you paid in Italy, as foreign tax credit. So again, happens that certain clients, they don't want to, let's say, disclose what's going on in Italy in the US tax return. Of course, that's not right, first of all, because you should do it. And by the way, 90% of the scenario that we see on a, let's say, yearly basis when we file our 1040 tax return is you have a benefit. I mean, I've been always say that here in US you have to disclose everything, because at the end of the day, like it is a specific example that is very easy and is very common. A lot of clients, a lot of question, a lot of let's see, friends that they always asking this. I'm stressed out that I say, guys, do it, disclose everything, because you have, at least in US, a tax advantages. Also, because as long as you did not really got through your family this property, and the value basically that you hereditate is, I want to say zero, but is of course pretty old, you can get the depreciation. And technically, as long, again, you don't make a lot of money on the top line, is usually always like a loss that is called passive active loss, that you can carry forward in your future. And once maybe you're going to sell it, you can use this passive active loss to offset a potential capital gain. So again, this is the reason why I'm stressing out about disclosing everything, because in 10 years, maybe you're going to get a benefit when you're going to sell it, because you accumulate passive active loss generated by this opportunity to deduct here in US all the expense related to your condos or your house in Italy. And I mean, it's good to do it.
Pay,
I mean, that's
and pay less taxes. Can you
Filippo,
tell us? Oh, sorry,
I
Sarah.
just have a question. So I have a couple of questions. Whenever you want to hear them, let me know.
Yeah, I
yeah,
just
sure.
like to get more into the detail of the taxation in Italy. Can you tell us, Filippo, what asset, or actually, excuse me, what income, general overview on the income that is taxable in Italy as a US resident? You mentioned rents, but maybe there are other assets such as, or income actually coming from other assets such as bonds or stock, or can you mention that?
Yeah, sure. Sorry that I got lost because I was reading some question.
Oh, sorry.
My bad. When you talk about other income, you talk about income that you, as let's say, Italian living in US,
Correct.
earn in Italy or earn in US. So like you have
I-
a bank account in Italy.
In Italy, exactly.
Yes.
As an Italian, well, not necessarily an Italian citizen, but if I have an income from Italy, how do you know if that income is taxable in Italy? Because yeah, it makes sense that if it's a rent, because it relates to real estate, is taxable, but maybe there are assets that generate an income that is not taxable in Italy, or I don't know, it
So
makes sense.
it's totally true. The perfect example, again, we go back talking about real estate. So as you know, in Italy, if you're going to sell, let's say, your property, 90% of the scenario, you are not going to pay any capital gain on the, of course, sales of this property. For instance, your apartment, your condo, your house. In US, you have to disclose and pay tax on this capital gain. the maximum rate is 20%, is going between 0 to 20, but more or less 10% has to be paid. And if you are, of course, a California resident, is not only federal income tax, let's see, implication, but also for California, because at the end of the day, you are a resident in California, you have to pay tax in California. If you, for example, have a simply Italian, let's see, bank account, and you have the luck to make money with dividend and again sales of stocks in Italy, if I'm not wrong, you pay the imposta sostitutiva that it seems like is a 26% fix. It's like kind of cedolare secca, and in US you have to disclose it. You have to pay the same tax treatment that you are paying with your US let's see income, passive income from, of course, portfolio titoli. And you can, of course, like I say, same principle, utilize this Italian, let's see, imposta sostitutiva in your Form 1116 and try, of course, to have a foreign tax credit that is going to offset your UX taxable liabilities. So, unfortunately, like I said at the beginning of the conversation, being a US taxpayer, you are going to be taxed on your wide income. So it's not like in Italy, like I just said, once you declare that you are living abroad, it doesn't matter what's going to happen over there, as long as, like I say, certain specific scenario. But you are, for example, US citizen, you are moving to Italy, you're going to live there, you're going to establish your tax residence in Italy because you're going to stay there longer than 180 days. You really move there, you are going to live there, you're going to have to retire there. You, like I say, you still have to file your US tax return and disclose that you are, of course, an American living abroad, but the exemption that exists, that more or less is $120,000, is only for US citizen, US taxpayer living abroad, making money through a salary. So if you are an American that, like I say, is going there and is going to enjoy the Italian Riviera and making a living on the US, let's say, stocks, interest income, or saving, again, you have the, unfortunately, it's mandatory to still file in US, and it depends about which is the income also in Italy. So it's important to talk with people like us before moving to Italy. I'm talking about in this scenario, America, but even Italian that are moving back, the strategy that you have to follow, and of course planning, because you have a risk that unfortunately, of course, there is a tax treaty in place. First of all, tax treaty between Italy and USA. California, for example, it does not follow this treaty. So the technical meaning is armonizzazione, harmonize. It doesn't harmonize to the US Italian tax treaty. So the California say, listen, I don't care about the tax treaty in Italy. You can even, the Italian, the tax that you pay there, they are not a tax credit for our California. So that's the strategy on moving back and forth is very important. You can incur in a big tax bill both from Italy and both from US.
Okay, so you mentioned salary. If I receive a salary from Italy and I am an American citizen or an Italian American citizen who moves to Italy, I don't have to declare my salary in the US, but that's probably the only income that I don't have to declare in the US. All the other incomes,
Only if
income.
if it's less than $110,000 every year it changes based on the inflation rate. But like an Apple CEO and you're making $1 million in Italy because you are the CEO of Apple for the, let's say, Italian million, and you are American, you have your you are, let's say, safe for the first, let's say, $100,000, but on the remaining $100,000, you potentially are going to pay tax not only in Italy but also here in US. If the Italian, let's say, tax percentage is not enough, you have also to cover it here in US. I mean, moving and living in Italy, usually, unfortunately, the tax rate is higher. So
there is an exemption, you said, an exemption of $120,000 on any income that you make if you move
only
to
salary.
another country? Only on
On
salary.
your salary. Only if you have like an Italian busta paga or W2. Doesn't exist Italian W2, but you really have a contract with an Italian employer. You are an American citizen. You work for, maybe even it's happened that like our clients that they are moving from Italy to US, same as American that they're moving from US to the US company that have the Italian office. So, and of course you have to make a living and you have to get a salary. Only the first $110,000 are, let's say, exempt from a potential, let's say, taxation.
Taxation.
Of course,
and everything
like
else
I say, because you are Italian resident, you're gonna pay more or less on expensive, let's say, salary like this, 45 to 50%. And in US, as you know, the highest tax bracket nowadays is 37%. So unfortunately, you pay all your tax in Italy for sure. You don't have to pay something here in US, but again, you have to disclose it and you have to prove it because you have to, of course, file all the US tax form showing that you have an Italian salary, you pay tax in Italy, and so you are, of course, let's see, exempt for paying an extra taxation here in US. But at the end of the day, this is very important, and unfortunately, like I say, is the only, let's say, small, but it does, I mean, depends about your work. So in Italy, 120,000 euro is a good, I mean, sorry, dollar is a good salary. So
right. Okay.
but again,
And
the complexity is that as long as you are not going to throw away your American citizenship, as long as you are an American citizen, you have to file and disclose all your, let's say, income worldwide.
And once you, this is, my last question, then we can go to the Q&A. But once you disclose and file your income tax return in the US for your Italian income as well, for your Italian salary, for example, since you have already paid you've already been taxed in Italy, you can still deduct the taxes that you have paid in Italy from your US taxation, not from your California taxation, though, right?
Correct.
Okay.
Correct.
So there is still a possibility to deduct the taxes that you paid in Italy, but only at the federal level, right?
Correct.
Okay.
Unfortunately,
Okay.
exactly, the California, like I say, it doesn't follow. It doesn't harmonized with the US and the Italian tax treaty. So I have a, these are, for example, I see on the Q&A, this is let's see, interesting question. How about I have a freelance income in Italy while I travel there, but I live in the US. So again, this is, let's see, is a problem. That's not your problem. It's the problem of who pays you. So if the Italian companies pays you as a freelance when you are working on the Italian soil, technically and unfortunately, because we are involved a lot in this annoying procedure, they're going to ask you for the proof of your, let's see, tax residence along with the form 6166. So you have to prove them that you are living and you are filing your tax return in Italy. So depends on the type of income they are going to pay you, and they are not going to withhold anything. But if you are not going to comply with this, there is a risk that they're going to withhold 30% of your, let's see, invoice of your sales, of your income. So it depends who is, again, who is going to pay you, because let's see, is their kind of problem. You have, of course, to declare this income that you make here in US and in Italy, as long as you are there no more than 180 days, you comply with your, let's see, client, supplying of all your the document that he required, you are safe in Italy. You don't have to do anything, because again, you are not an Italian fiscal resident. I hope that I answer in the proper way.
Can we read
So,
in chronological order maybe, and do like a couple of minutes for each of the questions?
yes, yeah, you can do, Sarah.
Should I read
you
them?
can
Answer?
exactly, you can lead here. So
It says, Joe says, okay, so if I live here in the US and let's say I'm in a 28% tax bracket and I move to a town in, say, Puglia with less than 20,000 people, I will owe only 7% tax to Italy? Yes, but what happened here? Do I still owe the remaining balance of 21%? Because I know very well that American taxes, that America taxes Americans regardless of where I live.
no. So if you are okay, so if I see the question. If I live here in US and let's say okay, and I move in Puglia, okay. So this is I try to explain one more time. So now, as long as, like we discussed, is proof that you are an Italian fiscal resident because you are there longer than 180 days, you basically move there with all your family, your, I mean, interests now are not anymore in US but are in Italy. Like I say, you have now to file two tax returns, the Italian ones, because now you are an Italian fiscal resident, and the American ones. So what happened? First of all, you are going to file the Italian tax return and then the American. I believe that I don't know your, it doesn't specify which is your, let's see, income, because like I say, if you are going to Italy and your income is still generating here in US and is, for example, passive income, let's make an example. You are lucky, you have $1 billion on your saving account and you are making $1 million on interest income. Pretty simple. You pay taxes in US on that, but thanks to the Italian tax treaty, you cannot pay any money in Italy, for example, because the tax treaty is giving the opportunity to not pay any, let's see, tax on interest income generating on a bank account overseas in this scenario in US. But I mean, it's a very unique scenario. So I don't know which is your income, but to answer to your question, you don't have to follow the bracket, the 21, 28%. It doesn't work like this.
This is a special case then. A special case when you receive an income from investment abroad, in the US in this case.
Exactly. You pay in US your capital gain and the interest income. And again, if it's something that is covered by the tax treaty, for example, the interest, let's say you are safe in Italy, you don't basically pay anything. If you are making money on something that unfortunately is not covered by the tax treaty, there is unfortunately the risk that you're going to pay also tax on something that you didn't earn in Italy, but was earned here in US. This is pretty a famous example on the, for example, the 401k or the Roth IRA. So that's why I was saying that it's important to plan before moving, because, like I say, certain income are, let's see, safe under the tax treaty, and other one, unfortunately, are not. So the problem that when you're going to be there, you didn't plan enough, and you have to have an important bill in Italy, because unfortunately, like I say, the system is pretty it's pretty draconian nowadays over there.
And so he said,
And
if
what
I
is the-
understand the scheme correctly, I think I can write off what I pay to Italy on my US taxes, but if it doesn't equal the percentage of what I owe to the US, I assume I would still owe that amount, the IRS, right?
Exactly. Yes and no. It means that, like I say, it also unfortunately is not dollar on dollar. So you pay, I don't know, $20,000 Italian tax. Of course, you're going to disclose and to report on your US tax return that you paid in Italy $20,000 or certain income, but it's not that happen that you are going to have a $20,000 tax credit exactly, because unfortunately it's done a certain, let's see, ratio between your total income, where is your income. So like I say, this is the reason why if it's happen, you don't have to file your tax return on TurboTax. And I mean, I'm not pitching our services, but and sometimes it's happen also that you are going to file your American tax return with your historical and all the CPA friends that unfortunately it doesn't know anything what's going on in Italy, and again, you don't get any benefit about what you paid already in Italy and to save here in US. Also, the Italian, of course, the tax return, of course, is an Italian document. So you have to know how to read it. It's pretty complicated. Actually, honestly, I find very a hard time to understand it. But like I say at the beginning, we have 100 people in Italy, commercialisti, that they are helping me when I have this specific client. Here there is in the call too, there is Anna, my assistant, that she's actually commercialista in Italy, so of course she's better than me to read the Italian tax return. For example, it's in the slide that we're going to share later. In Italy, in the past, now that I believe is not, let's see, in place anymore, there was this famous fuga dei cervelli. So the fuga dei cervelli was a tax benefit for the Italian that they used to live abroad to come back to Italy and say, now you go back to Italy, I'm gonna give you a very good tax rate, and so you can at least save a lot of monies on your Italian tax return, but of course you have to come back. And of course, this is disclosed in the Italian tax return, but I mean, you have to be really good to find it out. And like I mentioned, if you are in the way around, and it's happened that you are maybe a green card holder, and when you are a green card holder, as I hope everybody knows, being a green card holder, you follow more or less the American citizen, let's see, for tax purposes, duties. So you have to file always your tax return, even though you are not longer, let's see, in US. And for example, in this specific scenario, we had a client that he moved back to Italy. He was still carrying his green card. Of course, he got the fuga dei cervelli tax benefit. We received his tax return, and of course, there was a small box where there was this, of course, tax Italian treatment. And it's happened that this guy, for example, was the first time in my 10 years career of filing, let's see, tax return like this. This guy paid less tax in Italy, but he paid more tax in US because like I say, in Italy, this was a very aggressive tax incentive to move back to your country, and was, I guess, 10% flat rate on all incomes. And of course, like I say, US, this guy was perfect example, getting a salary. It was example on your first 100. It was, of course, a guy that was working on an important company, was making good money. So he was exempt only on the first 100. On the remaining one, he has to pay tax in US because the 10% that he paid in Italy was not enough to cover. So that's, I hope, is answer to the question that I see, that percentage. It's not unfortunately percentage. It's again, it doesn't work like this. I would like that it works like this, but I will be doing another job tonight. I will not be here. I will do something different because it will be very easy to do it. But unfortunately, it's not like this. It's pretty complicated. And unfortunately, you have to work with somebody that at least he knows all pretty well the Italian tax return, or pretty well the American tax return, and he knows how to navigate in the foreign US tax form that, of course, like I say, they can really give you a benefit, even though, of course, maybe you are upset because you pay tax in Italy, but at least, again, in US, you can have at least a tax saving on what you paid overseas.
Grazie. I have another one. Just do you need a drink? Water over here?
No, I'm good. Thank you.
Okay, we want to slow down a little bit, but this is the question: how are American retirement accounts like pre-tax 401k and Roth IRA taxed in Italy? Assuming one wants to retire there, is the Roth provision recognized in Italy?
This, unfortunately, is a difficult question. And of course, we cover in with our firm. And again, it is related to partially the tax treaty. And sometimes, because it's part of a sort of, at the end of the day, it's your TFR, is your, let's see, social security, is like your pension. It can follow the tax treaty, and you can at least avoid to pay tax in Italy on this, because again, it's part of the tax treaty. But is tricky because, of course, 401k is something, the Roth is something different. So usually when we have this kind of scenario, of course, we're always working together with the Milan office and my partner Sarre in New York. And of course, we answer properly with a tax memo or, let's see, simple Excel where we're going to show you how much you're going to save or gosh you're going to spend in taxes in both countries. But is a very difficult, let's see, question, because are very specific retirement plan that sometimes they are covered by the treaty and sometimes are not. So it's something that, of course, if you have these kind of things, it's better to really work on it with us, with your CPA or whatever you trust before doing something wrong.
Okay, keep going. So if I live in California, move to Italy, is there an agreement between Italy and California or only with the federal US government? Basically, will I still owe California state tax when I file taxes while living in Italy?
It depends. If you are a California resident, yes. If you are not longer a California tax resident, you don't file any income state tax return, but you are going to file only the US federal tax return 1040 and all the other, let's see, mandatory forms. But as long as you are not anymore a California resident, you don't have to file and to pay anything to California. If you are a California resident, like I say, and you have income, property, rental income in Italy, for example, you pay tax in California too, because they're going to be part of your income, because at the end of the day, you are a tax resident in California.
Okay, so this is very important because it does not work both ways. So if you are a former California resident and now you live in Italy, if you pay taxes only for the federal government. But if you live in California and have an income from Italy, you may not pay taxes at the US at the federal level because of the treaty, but you would still pay taxes at the state level on your Italian income, correct?
Because,
I can repeat it.
no,
So,
no, vai.
Okay, so
it's important exactly because, again, this is also if you're moving to Florida or to any other of the 50 states. So especially California, everybody knows, is one of the, with New York states, is one of the highest, let's see, states with the, of course, pretty important tax bracket. So again, it's important. As long you don't live anymore in California, you don't have anymore your driver license, you don't have anymore, let's see, anything, it's fine. I mean, California would never, let's see, try to make you pay something that you don't own, because again, you don't live here anymore.
I'm gonna try to see, maybe we can, so like we have about like, I would say 14 other questions. I'm not sure we're gonna cover it in 8 minutes, but what can we do is maybe respond to them later if we don't respond now, but should I get going?
So there is one that is the last one that is talking about the regime fiscale agevolato, and I guess I explained with the specific as example a few minutes ago. So this is fine. There is the 401k and the retirement plan, like I say, yes and not. We need to, I mean, work on the tax treaty, because this is pretty specific. I know you're gonna be upset because I didn't give you a full answer, but at least I give you an hope that you're not going to pay way too many taxes all over the both countries. The The Social
Excuse me, Sarah, we
Security
can,
retirement, yes, is a retirement plan of the tax treaty. This should be an interesting question. If we were to be residents in Italy but spend some months in California, the state will still claim we are a California resident and partially tax US. It sounds like California state tax cannot be read off against it. Yes, this is unfortunately is like I say is a bad news. But again, California doesn't follow the tax treaty. But if I can answer again one more time, you have to make sure in your tax return, because in California you can claim that you are partial year California tax resident or non-resident. So you have to make sure starting counting your days. So, and where really you are and where is your center of interest. So, like Sonia said at the beginning of our webinar, I mean, it's hard to tell that you are resident in both places. I mean, sometimes, I mean, it cannot be. So, for example, for California, it's again, if you stay here 6 months, so that is almost 183 days, it means that you are not a resident in Italy. You should not be a problem. So again, you have to be careful about how many days you are traveling or living overseas. But again, we have also American clients that they don't have, I mean, any interest in in living in Italy, but they have interest in trying to minimize the taxable, let's see, liabilities in California or New York. So they try to move out of states, and like I say, minimizing the highest rate in the country and avoiding taxes. Like I say, is possible. I mean, it's not going to be the first and the last one CPA to say yes or no, but has to be done in a proper way. I mean, it means that if you want to move out from California, of course, you don't have to be longer voter ID. Forget about it. Your driver license, your utilities bill. So really, you have to prove that you don't live in California anymore, and also you have started counting the days. And be careful, because if you leave, for example, tonight, California is at 7, and you fly to Nevada, and you're there at 8. Today is still California. Or same, it's gonna be in California and in Nevada. I mean, Nevada is not a problem because there is not income state tax, but be careful when you count your days out from California, because when you leave is included in the days. So you can get to 183 days even if you take a plane today and you're going to Italy. So these 2 days California. So
Sarah, excuse me, we can go, we can actually read all the questions. We don't have to finish at 7 on the dot.
no, also another, again, same question, the Christine. Let's say, can we take a deduction from this tax for the property tax we pay to California? No. This is like I say, unfortunately, there is not any, let's say, tax treaty in place between Italy and California. So all the taxes that you pay in California, they're not going to be, let's see, any opportunity to have a credit in Italy. So this is important, and I'm happy that at least now everybody knows that wherever you pay taxes in California, they are not going to be a foreign tax credit in Italy, unfortunately. We'll say, what if we want to buy a property in Italy as California resident, but with dual citizenship? again, I guess I answered before, but I'm gonna recap, and I'm gonna try to be very short but efficient. You can buy a property in Italy, being a California resident, having the Italian, let's see, citizenship and the American citizenship. And again, if you don't rent it out, the property in Italy, you don't have to do anything here in US. You don't have to disclose anything. You just bought a property and you don't have to do anything. And even with the Italian, let's see, tax authority, as long as you have to do all the classic notaio, things like this, but you don't have to pay any income tax because you don't generate, you don't earn, you don't make any money on it. If you start, like I say, rent this property out, having Airbnb or simply a tenant that pays you on a monthly basis, like I say, $100 secca in Italy on the, let's see, gross sales, schedule in your American federal tax return. You can, of course, deduct all the expense. You can have only for the federal the tax credit that you pay on this cedolare secca. California, this income is gonna be added up at your, let's say, American California income. You're gonna be pay tax on this, of course, on the net, so gross less all the expense. So this is another tricky question. We are dual citizens, but only plan to spend 180 days in Italy. So you are not, because Italy is 183 days. So maybe be careful, don't do 180 to 170, let's say. But as long as you are not going to be more than 180 days, you don't, like as Sonia said at the beginning, that's very important because Italians love the forma. You are a bureaucratic country, and we like papers, we like, registration, everything. So as long you don't disclose that you are there, but you're going there on a vacation, your, let's see, your house, and you don't do anything, you don't work, you don't make money, and you're there less than 180 days, 170 days, you don't have to do anything over there. So about the money that you can transfer from US to Italy, of course, US bank doesn't ask you anything. Italy, of course, there is a problem sometimes on the cash that you can withdraw. So that's you have to be careful because you can unfortunately get some sort of, you can trigger some Italian Guardia di Finanza authority, but usually there should not be any, let's say, limit from transfer money to US to Italy. The problem is when the money are in Italy and maybe you use a lot of cash, and it may be a problem. But again, be careful, like I say, about how many days you are going to spend over there. That is the most important things. And again, you have to plan in advance. But usually, like I say, bureaucratic ways, so don't do anything with the comune, with all the registration of getting the Italian ID, and don't spend more than 183 days. So that's at least you are not going to be taxed in Italy. The only problem happens when really you have a plan. I was in New York on yesterday, and I had a meeting with potential clients, and their intention was pretty easy and straightforward. Say, we are moving, we are going there, we want to retire there, we are looking for a house over there, we are going to sell our property here in US, and we're going to live there with our, let's see, social security, with the pension, and with the, of course, we hope interest and dividend and capital gain that we are making here in US after selling the property. And they ask me, so how is going to be the tax treatment over there? I say again, I don't want to tell you something wrong, but in this position, technically, you should be kind of safe because again, both income, so interest income, retirement, pension, are both covered under the tax treaty. So also it can happen that you have only to file and to pay taxes in US and do nothing in Italy. But again, we need to understand all the flow, all the income, and this was basically the meeting. But again, for them was a pretty easy and straightforward plan. If you are a little bit here, a little bit there, you have to be smart and don't exceed the 183 days in Italy.
There is a question about succession from Lauretta. I'm translating it. My question is regarding succession in case of death. If you don't have US heirs, but only Italian heirs, would the Italian heirs be taxed on the American estate? Yes, as you know, the American heirs, you have to pay taxes in the US for the American succession, right, Filippo?
So this is a very good question, and I will also try to add something very interesting on it when it's the way around. So I am an Italian. It's my scenario, simple. I am an Italian. I have my now US citizenship. Of course, I've been living here for more than 12 years. I file tax return here in US. I am, of course, Italian IRE, so I don't have anything in Italy. Unfortunately, it's happened that my family passed away and I'm going to get their property, their asset, and everything. So, as now American, I can receive all these assets at the fair market value, so at the value of the last value, not the cost basis, but the fair market value, so at the day that they pass. So, for example, the house, the cost basis was 10,000 mila lire because it was, I mean, my grandfather. Now I have to ask to an Italian realtor to get a sort of course, valuation, and I can get on my, let's see, US tax form, tax return, the value of the house at today. So I'm gonna get $1 million is the value of this house, but I'm not going to pay any things in US, either in Italy, zero. A little bit different if your parents are going to give you this property as a gift. So as a gift, unfortunately, you have to get this gift and you have to carry the cost basis value. So really is, I always say to my clients, I mean, as long as you really don't need it because you need money, because something, but let's wait. I know it's bad to say, but let's wait that your parents they are going to I mean pass away, because in this way, of course, you're gonna get this asset at the new value, and if, for instance, you are gonna sell it 3 days later, you receive it. Technically, you don't pay any capital gain because it's the same value, so it's the fair market value. So this is for, let's see, American like myself now with family in Italy. When we receive asset, this is very important, the difference between gift and estate. So gift carry the value, the estate after the death is gonna have a new value that is the fair market value. That is very important. And who receive this asset is not going to pay anything. You have to file, as long with your tax return, the form 3520. The limit is $100,000 value. So if, for example, you get 90,000 euro cash, so your mother is gonna send you 90,000 euro on your American bank account. Now the more or less the exchange rate is the same. You don't have even to disclose anything on this form with your tax return. If you're going to get $1 million, or sorry, 1 million euros, so it's gonna be more or less 1,100,000 dollars. In this form 3520, you have to disclose that you received from your mother this name, $1,100,000. So this is very important, because it's happened that we have a lot of people, like even tonight, they ask us, if my mother is sending money, if my parents, if some relatives, this is the way you have to do it. You have, first of all, you need to understand that the cap is $100,000 for anything: money, cash, stocks, asset, paints, shoes, Louis Vuitton bags, everything. So once you get more than $100,000, you have to disclose all the assets that you receive in this form, in life and after, because of course is both for gift and estate. Different. I want to say one more time: gift carry the same cost basis. So, like for example, you're going to receive your family house as a gift, and of course it has been done. Has been there since the beginning of the century, 19th century. Of course, you carry this basically zero cost. Is the il catasto, that is basically the very small value. If you're going to, unfortunately, again, wait, at least, I mean, the only good thing is that you can get this property at the fair market value, so at a higher, way higher value than the cost. And if you're going to sell it, at least you can minimize the capital gain tax exposure.
Sarah, you have the Q&A.
Yes. Let's see.
Yes, this is another cool question, but I see already. Is a US salary from a US company for a US citizen living in Italy taxable in Italy? Like I say, yes. But again, as long as Italian tax resident, so you are there longer than 183 days, you, like say, get all your paper, you get all your document, and you are an Italian tax resident, you have to, unfortunately, pay tax in Italy. Here in US, like I say, you should, in your tax return, disclose that, by the way, you live abroad, and you should talk with your company to not do any tax withholding, at least on the first $120,000. But if you are, I mean, Italian tax residents, of course, it's taxable in Italy. It's like we say tonight. So is the 10% or 10% of 7 flat tax in Italy only on salary, on investment? No, that's the fuga dei cervelli was on only on salary. And what if the salary come from US? No, the salary has to come from an Italian company, no US. So you have to be employed by an Italian company, and you have to live in Italy, and you have basically even to show that you are not longer anymore interested in leaving US or going back to US. Or where, I mean, we have even a former employee that he is an American citizen. Now he works in Italy. He got this tax benefit, but again, he's an American citizen, so he can go back in US when he wants, but he got the benefit. But if you are in Italy more than 80 days as a tourist, like I say, you basically don't disclose anything to the Italian tax authority that you live in Italy. So you can stay there as a tourist. I mean, that's good for you. I mean, be careful. I will not stay longer than 180 days, but if you don't work there, you don't do anything, and you don't, I mean, you prove that your center of interest is still US, it should be okay. Also, for example, here in US, we have certain clients that they file the tax return here in US as a non-resident, even though they spend more than 183 days or they exceed the substantial present test here in US, because you can claim that your center of interest is not US, even though you are here longer than 180 days, or you exceed the substantial test presence, because you're going to say that your wife, she's still in Italy, your kids, they are going to school in Italy, your friends, your bank account, your car, your driving license. So, of course, if you're going to be audited, you have to prove it, but there is a specific area in the 1040 non-resident tax return that you can claim that you have been here longer, but still your center of interest is Italy, so you are going to pay in US only the earned money in US, not what you are making, you made in Italy. And this is, for example, it works for a lot of Italian expat that they are doing a lot of back and forth between the two countries. But as a tourist, I mean, it should be not a problem. If you're a US company, if a US company reimburses a US citizen for housing expense in Italy, is that taxable income in Italy? And again, it should not if you are there no longer than 180 days. If you are there more than 180 days, this, by the way, is a French benefit. It's like in US, also in Italy, it's taxed as a salary. So unfortunately, I cannot give you a perfect question because I don't have enough information, but I can tell you that definitely if you are, again, Italian tax resident, you should pay tax on that. But again, you're gonna tell me who's gonna know it because they pay me on the US bank account in the US company. Remember, unfortunately, in Italy, like here in US, it's called IVAFE and Quadro RW means RW. You have to disclose your, if you, of course, file the tax return in Italy as an Italian tax resident, you have to disclose your banks that you have overseas. So technically, if you file, they're gonna find it out. If you don't file it, it's hard for them to find it because it's US on US. But again, if you are there longer, sooner than later, I don't know, maybe they can get you. Let's say I pay annual property tax on my home in California. Does tax property tax count over in Italy while tax on homes outside of Italy? I don't know what does it mean, the Italy wealth tax on home. Like you mean the wealth tax on home is like the IMU, like the Italian property tax? No, I mean this is separate. But maybe I did not understand exactly the question. But like maybe I try to recap what you pay in California as a property tax in California. Unfortunately, you cannot have any tax benefit in Italy when you file the tax return as Italian tax resident. But for sure, you don't have to pay the, let's see, Italian property tax, IMU, on your California home, because I mean it's separate country. I mean it's not like I say the IVAFE or the IVAFE is the tax on wealth when you have, of course, bank account investments, but I don't believe is on the on property on homes.
Although you have to indicate it in your income tax return, in Italy, you still need to indicate all your property, real estate, I mean, abroad.
I don't believe so. I mean, again, unfortunately, I don't even know how to file my tax return in Italy.
Yeah, no, but
I should ask to
yeah.
my co-worker and partners, but when we receive this tax return, we see that, of course, you pay the catasto, the IMU, but
Yeah,
I
you
don't, for
pay
example, I don't disclose I have these clients that, of course, they own property in US and they own property in Italy. There is not the US property over there. There is, if they are not resident, the US bank account. So that's yes. You have to disclose the US bank account, and also there is a tax on that. There are certain amount that are taxed if they exceed a certain limit. So that's for sure, but only for bank account and investment account.
Yeah, you may want to check that out, because as far as I know, yes, you have to declare your real estate abroad. That's something that we should probably check out, and maybe write to this person to,
I don't know. I know Anna. I know Anna, my coworker. She's here. I don't know if she knows it. It has been. Maybe she can write it out here in the chat on the question. Anna, maybe you can. Maybe you know it. I honestly I don't. I don't remember. But maybe you can answer if it's something that you are familiar with. If not, we can definitely follow up with Sarah later if they need it.
Hey, can you hear me?
Annette, that's a good question. That I was saying that she like to move there as a teacher with social security, investment, and a trust. So I would like to say yes, you should be fine, but definitely has to be a review together. But if it's basically only, let's say, passive income from trust, from investments and retirement, it should be pretty easy and you should be okay. But again, I rather to make a three-way call with my partners in Italy, but it should be okay. Vai Anna, scusami, sorry.
No, I mean, what was the question again? Because then
about if you have to declare the property, if you are an Italian taxpayer and you own a property in, for instance, in California, you have to declare in your Italian tax.
As you said, it's all about the RW form again. And you list that you have the property in the US. Yes, you do have to. Yeah.
Sorry, I didn't know. Yeah. I only believe it was
from experience.
Okay.
What?
No, I was saying yes. That's what I knew, and I also indirectly and directly from experience. I mean, not by personal, by somebody that my family here, they own property abroad, and they have to declare it.
Yeah, because Filippo was talking about the IVAFE, but again, on the RW form, there's the IVIE, which is the tax on the value of foreign real estate located abroad. So it's like the IVAFE, but for the real estate. So again, it's like a small percentage. I'm not sure about the rates right now. It's like 1%. of the value of the state which is abroad.
Okay,
Yeah.
so that's we answered the question. Grazie, thank you. That's why we need a good team, you know, because you cannot be a solo player on this, because it's pretty, I mean, big, I mean, and huge information. I see a lot of people asking about the Roth IRA, and I'm happy. Definitely, I will follow up with you guys through Sarah, because this is very a common question, and I don't want to mess it up like I did with this IVAFE, because it's more ready to Italy, and I need to double check with my team, and not only Anna, but also especially the Italian partners over there. Also because in Italy it's always change everything every year, so it's very difficult to keep up with all the new regulation, because I believe IVAFE and all this, the RFW, all these things is happening when basically I was here. So like I say, I moved here in 2013, and it was something new, that happened in 2015, 16. So it's pretty recent. It's not that has been, let's say, it is tax in business for longer.
Okay. Do we have more questions, Sarah?
They would like people would like to have your contacts and also the presentation if it's possible. So if you can send it to me, maybe we can, or if you want to write it in the chat, what is the best way to reach you?
Yes, definitely.
Can
I mean,
can I write it
I don't know
down?
if you want to share with everybody because here in the presentation, I don't know if it's still. I guess you can see that or not. Yes.
Yes.
Yes, but I cannot. Let's see. Who can
Because
share?
here I have all my information, all the offices, everything. And like I said, there is all the example on the renta dei cervelli, the Schedule E on the foreign rental income, the FBAR requirement, the form 3520, like I say, about the threshold and all the, let's see, asset that you're going to receive as a gift or as a state. Of course, inheritance and property. So there are, I even believe, a lot of answer already. So if you want, I can even share on the chat. I don't know how I can do it, but definitely my Anna or my work here, they know how to do it.
I have a suggestion. Sarah, can we post this on our website? So everybody
We can send an email to other people. To
Let's
all
say
the
that I'm
people
trying to do that. I maybe I made it. Hold on, give me 1 second.
Yeah, you can just like send me the presentation if you want, and I'll put it into the as a link in the
I
chat.
have all my coworkers out on Teams, but they say that I have to copy and paste. Hold on, give me 1 second.
But we can leave it permanently on our website. That would facilitate, the
Copy. Hold on, I try.
access.
See, maybe it's happen. Yeah, I made it. Tax webinar presentation is there on the webinar chat. So
Everyone, let's see. Hold on.
yeah, max 1% IVAF every year. I guess yes. Alex. So I send this, and again, if maybe Sarah, you want to get all the
Wait,
the question.
You send it to me, but not to everybody. But I'll try to share it.
Nice on the chat.
Ah, okay, sorry.
Okay.
Vabbè, Sara, comunque lo postiamo anche sul sito, perché questo c'è utile.
Mm-hmm.
I don't know if Riccardo is still around, maybe not at this hour, but we should really, have this on our website. Is there any more Any more
No,
questions?
this is good question, Linda. She will say, it's my understanding that as a retired American with residence in Italy. So this residence in Italy, it means you are going to be tax resident in Italy, so you're going to live there longer than 180 days. That is important because, like you say, but if I get my Italian citizenship, then it's taxable. I mean, getting the Italian citizenship is not like here in US, like I say. Carrying the Italian passport or and having the Italian citizenship, it doesn't matter as long as you are not living there longer than 180 days. So you carry two passports, like myself, for example, and I am Italian citizen and Italian and American citizen. Like I say, I am registered as an Italian living abroad. So because it works slightly different, the Italian, let's say, tax law with the American one, I don't have to file anything. I don't have to report anything about what I make here in US. So, answer to your question, is important, like when you say residence in Italy. So what does it mean residence in Italy? It's like I try to explain. If you're a resident because you are living there, your ID, you get all your documents through the comune, if you are registered as an Italian tax resident. At this point, I don't know if the fact that you're working for the California government is exempt. Is like I say, as long as it's covered by the treaty, it can be, but definitely if you work for the California government, it doesn't count because, like I say, there is not any, let's see, tax treaty relation with California and Italy. But if it's just a retirement pension, like I said, it should be okay because it's covered by the treaty, so you should not be taxed in Italy. But again, be careful when you don't don't mix the tax residence with the citizenship in Italy because it's different compared to the US one. I understand you are a US citizen, you have to file your tax return forever, wherever you are, wherever you make money. In Italy, it's different. You are citizen, but you are not resident over there. You are in America, but you have the Italian passport. As long as, like I say, you don't have any income over there, you don't have to do anything. You don't have to pay
Exactly,
taxes and
so
you don't file any tax return.
unless you have some income from Italy, which
Yeah, exactly.
doesn't have, it's irrelevant if you are a citizen or non-citizen, a resident or non-resident, but if you have some income, then that is taxable in Italy as well.
I believe the only I guess only I guess I cover all the question.
Yeah.
But again,
Okay, I was able to send in the chat your document to everyone. So now everybody should have that available and we will post it soon.
I mean, I appreciate your, I mean, everybody times, and I see Marta, ciao. Again,
thank you, Filippo.
I try to answer to almost all questions. I know I was not perfect, and I'm sorry about it on the Roth IRA and 401k, but it's pretty, like I say, complicated. But I will definitely follow up with all the attendees. And again, it was a pleasure. I remember we did once maybe it was last year, it was last summer, and with the Italian Chamber of Commerce again, it was a Zoom meeting. So I guess at least every year we have to do it. So we also keep up
Absolutely.
with my with my
because the law
presentation
changes,
skills.
the rules
No,
change.
exactly. Exactly. But this time you see that I brought all my team. There is also a Raida that she lives in Philadelphia. and then Sabrina, she asked me to prepare the presentation. So at least I had a team with me if I was going to make some mistakes like I did with the Italian things, but
Absolutely.
Anna
We always
was
need.
ready. So at least I mean we didn't did a bad stuff. So, Sonia,
good
grazie che
team.
sono le 3, che sono le 4:30 in Italia. I mean,
Beh, vabbè, per la Chamber of
Grazie anche a
Commerce si fa
voi.
questo e altro.
I mean, at
Sì,
least
sì.
I hope you're gonna have a good time and enjoy the good weather. How is the weather over there now? It's bad. It was
I'm
raining.
working. Yes. Yeah. Well, did you say the good weather?
Yeah, exactly. It's not
Okay.
good.
Well, so far so good, except the fog that in my in the Padana in the Po Valley is always present. But no, I cannot complain. It's not too cold, and we have had sunny days. So yeah, that will be
I
soon
mean,
back.
New York yesterday was kind of chill, but back to California today was an insane beautiful day. So at least here we have always summer.
Another world, literally.
Well, thank you very much to everybody. I put in the chat
Thank you. Thank you.
a couple of links. One is the link about joining us. So if you guys want to join us, that would be great. We want to become like bigger and also do more of these informative webinars. And you can also donate and help us keep going with all these educational stuff. Thanks so much, Filippo and Sonia.
Ciao,
Thank you.
grazie.
Ciao, grazie.
Thank
Ciao,
you,
ciao a
everyone.
tutti.
Thank you,
Ciao.
all the attendees, and we will have another webinar about succession in particular and pensions. So stay in touch, and you'll learn more from the Chamber of Commerce.
No, I mean, that was a very good service that you did, and I'm happy to be part of the Chamber of Commerce, and thank you guys for giving us the opportunity to be with you today.
Thank you.
Ciao,
Thank you,
grazie.
Filippo,
Ciao a
Anna
tutti.
and Sabrina. Thank you.
Buona serata e
Ciao.
buonanotte.
Notte.
Grazie, ormai sto stata. Ciao a tutti.
Ciao.
Ciao ciao. Ciao ciao.